Okay, welcome everybody to this week's very special edition of Invest with Pete. Now, generally, I would usually talk about stock market, okay? But today I want to focus on another asset class, right? Which I think is going to be a focus area for many people and an important aspect of your investment journey. And that is none other than real estate and property, okay? All right, so let me just quick check with everyone over here. Who are preparing, right? Maybe in the next 6 to 9 months, you're preparing for a move in your property portfolio. If you are, type me in the chat. Okay, so how many of you here, you are preparing for a property move in your portfolio, okay, in the next maybe 6 to 9 months? Wow, Candy say, me, that's why waiting for your session today. Wow, nice. Okay, so just nice. Because I realized I haven't done a property live stream in a while, right? And I was looking at the market and I think that there are some very significant moves that you must be aware as an investor in property, right? So for those of you who are here, right, very fortunately, we also managed to get Ethan to join us, right? It's a very rare occasion and I'll talk about what I feel about property, and then later, Ethan, I'll get him to come on to share about his perspective on the local bank rates that is moving. Okay? All right, so without further ado, let me just start tonight's session. Okay, give me a second. Let me bring up the slides. All right. Okay, so as a starting point, right? Let me just, as usual, ask everybody, what do you think was the biggest news this week? What do you think was the biggest news this week for the Iran and US war? Okay, right? So if you're ready, type it in the chat. What do you think was the most significant news this week regarding the Iran-US war? So I can see it. Okay, so Daniel says Fed rate. I would say Fed rate wasn't that unexpected, right? So I was just having a chat with Ethan earlier on. Actually, we both kind of expected Fed to hold the rate simply because of the war, right? It's giving a lot of uncertainty, so yeah, we not unexpected, but of course we would love if the rate goes down, but it is what it is, right? So Kelvin says PPI. I assume Kelvin talking about PPI, okay, which is true. PPI is also quite important, right? Because the PPI was actually slightly higher than expected, so there's a bit of news of inflation, okay? But in my view, as a property investor, right, and I've been doing one-on-one consultation with clients over 200, right? So I live and breathe Singapore property in general, plus interest rate, right? And I can tell you one of the most important thing that I do is when the war started, I went to talk to the developers. Okay. Now, can anybody tell me why did I talk to the developers? Why are they so important? Why are the developers important to you as a property investor? Okay. In fact, if you're a property investor, you have not spoken to a developer friend before or someone to hold in the development side of the picture, you need to start finding one, or you need to basically listen to what I have to say later because super important. Okay. Yes, maybe it's absolutely right. Maybe it's saying, are they increasing price or lowering their asking price? Okay. So as a start, I just want to bring you to a certain stage of understanding first, right? Is that generally the market is being led by new launches first. NL, new launches. Okay? New launch will be lead the market for private property, private property. Okay? New launch will lead the market, followed by those newly TOP units. And then we look at the resale segment. So it's always in this fashion, in this sequence. And new launch is the one that will lead the price. Okay? And what is the most important news this week regarding the Iran-US war, especially got to do with Singapore property, right? Is this, that Iran just attacked the South Pass gas field, okay? This is a major Qatari plant that has got to do with liquid nitrogen gas. Now, I honestly don't see a lot of news outlet talking about this. And it was very shocking because when I talked to the developer side of the picture, They are all talking about this, right? So the general public is not talking about it, but the developers are all talking about it. Why? Okay, so number one, South Pass, which is this place, South Pass, okay, is the single largest natural gas field, not in the Middle East, but the whole planet. Okay, it is the single largest natural gas field in the whole planet, and it is co-ran by Iran or Iran, okay, Iran and Qatar. Basically, this strike will disable most of the gas production coming out of this gas field, right? And why is this important? Why is this important? Because now we are moving away, right? We are moving away from just pure oil disruption, but we are going into gas disruption, natural gas. And can anybody tell me, okay, why is natural gas so important? Why is natural gas so important towards property? Specifically, okay. Why are my developer friends all telling me, Pete, this is very important. This is going to change the whole dynamics going out there, right? In fact, as y'all are typing in the answer, okay, let me share with y'all one more thing, right? Is that in retaliation, Iran decided to launch a new barrage of missiles against another natural gas facility that is in Qatar, is the Ras Laffan gas facility, right? So in total, there is basically a very huge disruption in natural gas. And we are moving away from just pure oil disruption. Now we are including gas disruption. And what my developer friends are basically saying is this. They are saying that you can expect material costs to go up when natural gas goes up. Because natural gas is a very important component to a lot of building materials, to your cement costs, to your concrete costs, to your gravel costs, right? Even to your machinery costs, it is going to increase, right? And once the material costs increase, then what are the developers going to do? Developers is going to probably increase the price. They have no choice, right? They have to offload the cost somewhere, okay? But they will try their best, okay? They will try their best, but they say if the price goes up too much, there's no choice. Okay. Now, Kelvin say, isn't water, I think Kelvin is talking about cement, right? It's true. Water is a very big part of cement, but think about it. The cement clinkers, that means the powder itself. How is it created? So if you go and Google very seriously, right, it requires a lot of heating, a lot of energy. And that's where the cost of LNG comes in, right? So this in itself is already, to me, one of the single largest reason why property prices are likely to go up, because the developer that are building the new launch, right, that haven't launched yet, they will have to recalculate their numbers and say, hey, previously, maybe I was going to launch at this price, but now maybe I need to launch a bit higher just to buffer for that, for that increased material cost. Okay, that's one part. And the second part is, of course, interest rate. Because with the interest rate holding steady, now everybody is panicking. It's like, the interest rate is not coming down, right? That also means what? That also means that the borrowing cost is going to stay at this level for some time, right? And that is going to disrupt developers, because if you don't know yet, most of the funds that the developers have to build the new launches are not their own funds. They use what we call OPM, other people's money, which is the banks. The banks generally lend the developers a large amount of money to do that, right? So without interest rate coming down, maybe previously they expected to launch at once again this price because they thought that interest rate will drop further down. But with Fed holding steady, now they are saying, oh, my borrowing cost is actually going to be quite high or stay high. Should I sell a bit higher? Right? Okay. And with that, there is no better person than to bring in to discuss this than my very good friend and a very, very seasoned mortgage broker who is always watching the interest rate like a hawk, okay? And that is none other than Ethan from Unbeatable Mortgage. All right. So if you can join me to welcome Ethan to join us in the discussion, okay? So everybody type in CCC in the chat, okay? Type in
Hello,
CCC in the chat.
everybody. Hi, Pete. Thanks for having me here again.
Hey,
Really
thanks for
appreciate it.
joining.
Happy to be here. Happy to be here. Hello, everybody. Good evening. Thank you all for coming.
Yeah, so Ethan, okay,
Mm,
so maybe before you talk about the whole take on interest rate, right? I think there are
mm,
a lot of new players here in the Zoom, right? So maybe you can also quickly introduce yourself, right? What do you do in unbeatable mortgage, right? And later on, for those of you who have questions about mortgage, you can also ask Ethan as well.
mm. Okay, wonderful. Let me share my screen. Can you all see my screen?
Yep.
Okay, wonderful. So, guys, we are mortgage consultants, Unbeatable Mortgage. We specialize in bank loans in Singapore. When you come to us, we go to all the different banks for you. We've got more than half a decade of experience. Because of that, we know a lot more tricks of the trade lah. Teach you how to do certain things that people are not sure about. People not very aware that this kind of things can be done. Things like cleaning up your credit for one. We've got 5-star reviews on Google, a lot of happy clients. We are partnered with every bank and we have a proven framework to help you guys, which is the strategy, the structure, and the rates. Later, we'll get into that. But more importantly, right, we do more than just surface level advice. We talk about what you want, what's your plan, and then how to be able to get there through our framework. And because of that, we'll be able to help as many people as humanly possible. Okay, so when we do primarily two things. One is to help you refinance for those of you who wants to take action. We will be able to get you better rates because we have the competition of 10 over banks. We'll be able to help you secure certain terms. For example, if you guys looking to sell, we'll be able to help you get a different valuation for those of you who are looking to gear up. So you'll be able to get a bit more liquid cash so that you all can
Mm.
do certain things in today's market to be able to get more money lah. And also to apply for new loan, right? Different banks got different rules. Some people they can use like the past 12 months. Some people they just look at the notice of assessment, and sometimes because of that, right, the difference in the approval is very different. And it can be the difference of like $200,000-300,000, maybe even more. We do credit optimization. We help people clean up their credit bureau. Some cases, even from HH, which is worse than GG, is really at the tail end of credit. But at the end of the day, we still manage to help this person get a loan, which then help them put a roof over their head, which is what we like to do, lah. Very meaningful work. We are very resourceful. We like to use everything in our power to increase the loan size if you want to, because if you want to do anything within the property, right, we always want to try to avoid having too many steps. Okay, because every single time you buy and sell a property, probably about 5% goes 3% into the stamp duty and then 2% to agent fees.
Yep.
So what we want to do, we want to get you there in the most efficient route possible. Okay, we want to be able to tell you what your next steps are. We can help you with your valuation of your house, budgeting on like whether to increase your next purchase, to check your loan accessibility, all the way down to like helping you make a better decision on to go for like a 3 room or a 2 room, depending on everybody is very, very different, right? And overall, we do look at helping people get better property choices. So like certain things we will share with people. Like if you're buying a property that's a bit too old, if the property is left with 60 years, yes, you'll still be able to get 30 years max tenure. But anything below that, for example, when you have a property that's 50 years old, 50 years remaining, you can only get 20 years, which then you can start to see the price drop. Every time when you're looking at property, right, it's always a pull and push. It is always a tug of war between the depreciation of the price and the increase of demand. So we can go into that a little bit more later. And just now you were talking about gearing up. Gearing there was somebody that was asking about gearing up at the earlier stage, so I added this slide in. Gearing up is basically freeing up cash from your property so that you take a larger loan and you borrow at mortgage rates which are really, really cheap. Right now, mortgage rates are about 1.3, 1.4 thereabout.
Wow, that's very low. It's even lower than the last time we spoke, right?
It is around the same. And
Around the same.
some banks are starting to raise because there are more risk,
Uncertainty lah. Yeah.
more uncertainty. Then a lot of them they pull back
Mm,
their rates.
mm,
But we work with 10, so we not that worried because there are some banks that still offer the lower rates.
mm.
Mm.
So Ethan, okay, so maybe let's go into the Fed decision this time round, right?
Mm-hmm.
How do you see in terms of the Fed holding their rates? How do you see that affecting the local bank rates and maybe some projections going forward, like, if you can?
That one, definitely, I believe that when interest rates are being held, right, they wouldn't lower rates anymore.
Mm,
But once again, we don't know what Jerome Powell is planning to do, especially in this latest one. He literally just said a lot of us don't have a clue on what's going on.
yeah.
And later I will get into the dot plot, and you will see that there actually has been a movement towards not cutting as aggressively as they planned
Mm,
last year, lah.
mm. Yeah.
Yeah, and um, thing is, when you are looking at that, then you can choose between the fixed and the floating rate, which again I have a slide later, where we'll be able to compare both, and then we'll see what works best for anybody who's interested, lah. All right. But on the other side, right, we got things like structuring your loan, how to hold the property, especially if you are looking to buy, how to do multi-property strategies, how to have a preempted decoupling or the 99
Mm,
whether you should extend loan tenure or not. And on the screen, you'll be able to see what it's gonna look like if you extend, which to buy first, how to sequence the thing, and what you should do. And that differs from person to person. So
yeah.
fix or float, which one to choose? At this point of time, these are the rates that are available in the market. And in for this floating rates, right, there are rates like Sora plus 0.175. First year is Sora plus 0, second year is plus 0.35, which on average is about 0.175. This actually makes your loan a bit more tempting, your floating rate loan
So
to be a bit more tempting.
so now the first year floating rate is just pure Sora. There is no spread at
Mm,
all.
no spread, 1 month lah.
Wow, that's how competitive it is, huh? Okay.
It is, and if
This is
you're
the one
above
month Sora. This is the 1 month Sora. Or the normal, or there's another Sora by itself, is it?
today, if you see the top left, I
Yeah.
highlight over
Yeah, yeah,
here.
yeah. I
The
can see
top
the
left,
0.96, right?
this is today's Sora.
Oh,
Then
okay.
the next one is the 1 month Sora. This one is 3 months Sora.
Mm,
So the last 1 month on average is going to be about 1%, or last 3 months on average is about 1.08%, which is close to our projections from the last time we met, lah. As
yep,
we
yep,
spoke, I believe we already talked about interest rate going below sub one, and now
yep.
we're actually seeing it already, lah.
Mm,
It's happening a bit faster than we expected, but we kind of saw it, lah.
yeah.
Okay. So next thing is to understand the projections, because that's what
Mm,
we're here today to understand. Yeah. Um, at this point of time, this is what the main thing we're looking at is the federal funds rate, whether it's moved. And
mm,
as you can see, the only thing that moved is the longer run at 3.1. That
yeah,
is the only thing that shift. There is almost no change in
yeah.
this.
All the way from 2.7 onwards, that never change.
Mm.
Yeah.
No change. And the thing is, I then go and understand what's going on. The
Mm,
GDP projections are higher for the next 3 years. Unemployment, no change. PCE inflation, they got higher projections. In part of because of the energy prices increasing. The core PCE inflation didn't increase that much because it excludes volatile food and energy. However, these kind of things do trickle down. EFFR almost zero change. So a few things from that the conversation that they have is that near term higher energy prices are going to push up inflation.
Mm.
They are seeing more meaningful shifts to lower cuts.
This year they
So
are expecting max one cut, right? Something like that.
here is the
The
dot
dot
plot.
plot, yeah.
So the thing is on the left is the most current one, on the right is the last year
December,
December
yeah.
one. So as you can see, right, in the last year December one, there are more people who are more aggressive to pushing rates even below 3, you know. And the thing is, now you start to see more of them consolidating at the same level and one
Current
cut.
level, yeah.
Current level and one cut. So
Mm.
some of them saying, okay, maybe we shouldn't cut. Some of them saying, okay, maybe one time.
Mm.
So this is very important because we are also expecting to see that the tariffs, they always say, okay, the tariff effects are going to be transitory. And they say this for damn long already.
They're
But
always wrong about it, man. But anyway.
yeah, but Jerome Powell say should see inflation come down towards the middle of the year. So next FOMC once again gonna be exciting. Surprise, surprise. Then oil shocks will not directly affect the core PCE, but might indirectly affect. They say there's a lot of uncertainty in the economy, and they were joking lah. They say if there was ever a time to skip a summary of economic projections, this is it lah.
This is it, yeah.
But so they have to write something down. But there is a lot of uncertainty in the market, and if Jerome Powell cannot predict where the markets are going to go, I think I don't have a lot of chance. But here is my shot lah. Huh?
Yeah,
We,
yeah,
we
yeah.
try to
Still try lah, still try lah. We still try to predict lah.
we try to predict lah. Huh? Okay, guys. So everything, please take with a grain of salt. I am not God. I cannot predict the future. If I can, I tell us all the 40 number. We all go and hamta tomorrow.
Hey, but so far you have been quite accurate, I must say.
Thank you so much. I do my best lah. I do my best. We try our best to make a more educated decision. So at this point of time, right, our current EFFR is 3.64, and by the end of this year, if we expect one cut, it will go to 3.4. I see that Sora is going to drop to 0.9. By the end of next year, it probably drop to 0.82, and then it will hover around there. But the thing is, Singapore is quite dynamic in the sense that we have an exchange rate policy where we base our monetary policy on our major trading partners. And when we trade with US less, we don't have to keep our interest rates that high.
Yep.
That's why in this chart, right, what you can see, right, is that we put 0.9, 0.82. However, if you look at this yellow color line over there, you are able to see it.
Yep.
This is my projections, and I predict that it might go slightly lower.
So it will stabilize at around 0.8.
0.7 to 1, it will fluctuate around there. There about lah.
Okay.
So a lot of us, right, we have this golden question. Okay, Ethan, 不要讲太多 already. The most important thing, which one is better, fixed rate or floating rate, right? Okay, Milo, so tell me which one is the best, yeah?
That's right.
So this is what I do. I compare both of them, and I understand that sometimes you got 1 month Sora, the first year is 0, second year is plus 3.5. Then very 乱. Don't know what's gonna give you better interest rate. So if you compare, I do this, I look at the amortization, I compare the interest rates, then I will be able to share with you guys exactly what's going on if we were to go for the 1 month versus the 2 years fixed at 1.35. Okay, so if we go for the 1 year, the 1 month Sora plus 0.175,
which is an average of the first year no spread, then second year is 0.3, right?
Correct.
0.35, sorry. Yeah.
0.35.
Yeah.
So first year, 0 spread, and this is available from 500K onwards. So
which is majority of people, to be honest.
Majority.
Yeah, majority of people.
So every $1 million, you are saving approximately 4,007
per year. Right?
Per year.
Per year.
No, sorry.
No, 2 years. 2 years.
2 years. 2 years.
2 years. 2 years.
You are saving 0.24%. per year.
across the yeah, okay, understand.
So the difference is going to be $4,743 between for a $1 million loan. To everybody's loan size is going to be different. Everybody's going to have different appetite when it comes to taking risks. Some people like to go into options. Some people like to go into stock. Everybody has a different gut feel on the situation.
Yep.
And when people ask me, Ethan, when we go for the floating rate UBA or not, I think this time got bar.
Yeah.
However, I think
Hey, wait, you don't, however, first, I asked them a question.
right.
Okay, everybody. So at this point in time, Ethan already showed you a scenario for floating rate and a scenario for fixed rate. Okay, so maybe at this point in time, at this point in time, can everybody, okay, even if your loan is very far away from lock-in, but assume you are able to change your rate right now, you're able to refinance, okay? Going forward, will you choose the floating rate or the fixed rate? Okay, so just type in float or fixed in the chat. Knowing what you know so far, based on what Ethan shared with you, and Sora rate is really at the all-time low, okay? I believe this is almost about COVID level low. Like COVID level, I think went to like 0.5 or something like that.
COVID was lower, man.
Lower. Oh yeah, it's like even lower. Okay. So with
COVID
that
was
said, right?
almost kosong.
Almost. Okay, with that said, right? Okay, we go back to the previous slide, right, Ethan. Everybody type in the chat, will you choose a floating rate or a fixed rate? If you are choosing floating, type float. Right? If you are choosing fixed, type fixed lah. Okay? Ready, go. All right. That's time to see what is everybody's opinion here. Those of you who are watching this. Okay, so Marcus says fix. Kelvin say F. F is what? Fix or float? Ruby says float. JL says fix. Okay, KK has a question about his loan. Yeah, so maybe later KK can ask lah. Okay, I see some float. I see some fixes. Okay, so this is their opinion. Okay, Ethan, what is your add-on to that? Because I know you always tell me, right, it's not just about the interest rate that you look at the loan, right? So what else do you look at?
Actually, it depends on what you are going to do with your property. So, like I said, we have a framework. We are not just going to tell you, hey, interest rate cheap, go for this one. We look at the whether like you have the terms that you need. So a lot of you have position to like want to sell your property or something. Maybe we might want to get higher rates, but give you a waiver of fees upon sale. Which means when you sell that time, right, don't have the 1.5% penalty on
Penalty
loan.
rate, yeah.
Very expensive, guys.
Very
Because
expensive.
1.5% of $1 million is already
15K.
15,000.
Yep.
Yeah. And
it will effectively wipe out whatever savings you can get from it already. Yeah.
yeah, my saving over here 0.22% only. I screaming already. 0.24 already. I screaming already. I say got bar already. The 1.5% very pain. I prefer for you guys not to save on that.
Correct. So it really depends on what is your plan, what is your portfolio plan, right? That's why I really appreciate Ethan helping me out when talking to my one-on-one members that come to me from consult, right? Is that because everybody's situation is different, right? And some people say, oh, I'm okay, I can just go for the lowest rate, right? But if your situation is like, okay, I want to have the option to sell next year, or maybe now I can't sell yet, but I want to have that peace of mind. Then, it's a different situation between floating and fixed. So there are a lot of things you need to talk about. The accompanying terms to the loan is very, very important. I think this is not being highlighted enough when I talk to a lot of my one-on-one members, right? They don't have that conversation with their mortgage broker in the past. It's like, what are the terms that favors me? So much so that, hey, if you can have the waiver clause, actually, if you have a slightly higher interest rate, it might be worth it, right? And going beyond that, also Ethan does a lot of the behind the scenes work, right? Just now you notice when he talked about like the things that he can help you to do, I was laughing at the back, because Ethan was trying his best to tell you and share with you what he can do, but he know that he cannot say a lot of things in the public, right? So there's a lot of things that goes behind the scene that he can kind of work out creative solutions for clients, right? So for those of you who may have less straightforward mortgage, right? For example, 99.1. That's very important, by the way, just a sidetrack, right? For those of you who are doing 99.1, it is very important to consult Ethan to understand who should be the 99 and who should be the one. Right? It is not just about who earn more income. Okay, although that plays a part, but you need to sort out that so that in the future you don't have the problem whereby you did the wrong 99 one, then the decoupling becomes very troublesome
Very expensive.
or very expensive.
Mm.
Yes, right. So that is very important, and I really appreciate Ethan making sure my one of my members get that sorted when they execute their plans. Okay, so for those of you who are thinking of getting a loan, doing that, just make sure that you go to Ethan and get it sorted out so that you don't have any troubles, because loan issues, the problem is that once you get it done, right, then you don't have headache already. But if you get it done wrongly, right, when you need to rectify it, wow, it's always very expensive. Yeah, it's always very problematic. Okay. Okay. Sorry, Ethan, you got anything to add to choosing flow and fix? Anything other consideration that people should look out for?
Before that, just now you were saying that I cannot say a lot of things in public domain, and I want you guys to understand where I'm coming from. So I asked y'all, can y'all jaywalk or not? Okay, and and all of you, right? When I ask you, can you jaywalk versus a traffic police
No,
ask
cannot.
you,
Cannot.
you see, me and Pete at this point of time will tell you definitely cannot, 100% cannot. If a traffic police person come and ask you, can you jaywalk or not? Maybe your answer also different. Kelvin say by left can. But if a traffic police person come and ask you, it will be also a little bit different.
Yeah.
So that's why we actually enjoy our consult between us and your community member Pete, and this way we can talk a bit more candidly.
Yeah.
And the things that is that ourselves, right, we are not obligated to review everything you tell us to the banker. So sometimes our clients will tell us things that we don't tell the banker because we're not obligated to tell the banker. But because of that, I tell the client, maybe this one you might want to skim through. They are able to get the loan.
Yeah, correct. Okay, so I think the important thing to highlight here is that it's nothing illegal,
It's
right?
nothing illegal.
Nothing illegal. Although jaywalking is illegal, okay, but so the example not exactly the same, but he's not doing anything illegal, but he is able to make sure that okay, you are doing it correctly to your most benefit. Yeah. So that is something that I really appreciate, because Ethan one-stop shop can approach all the banks for you. He can go and negotiate with the banks without you going to individual banks one by one, to find out all this, right? So I think that is really one of the best value add. And also to share with you, like, okay, how can you improve your loan eligibility, your credit check, improve your credit rating and things like that, right? Which I don't see a lot of people doing out there. A lot of times what I see is people go to the bank, right? Maybe they go to one of the banks and they say, hey, I want to take loan. This is my payslip. Then the banker just say, okay, you can borrow this amount. That's it. There is no like, this is your current situation, but if you do this, you optimize that, then maybe you can borrow more, right? That is seldom being discussed, right? So but it's not something that I want to discuss publicly, but for those of you who want to, you can actually approach Ethan to get it sorted for you. Okay?
Correct.
All right.
A small flavor is sometimes, right, when you get promotions, which bank will be able to access when you have a huge bonus that come in, but over the last 6 months, which bank to go to, and every bank got different yardstick, and different yardsticks will give you different approvals.
Yeah, correct. Okay, so speaking of that, I think some of you are DMing me, hey Pete, how to contact Ethan. Okay, so this is how you can contact Ethan and his team, right? He is from Unbeatable Mortgage. He and his team has been helping my one-on-one member for the longest time. I think over 95% of my one-on-one members go through them, right? Because it is really one-stop shop, end-to-end service that they provide. Okay, so for those of you who want to, right now, Ethan is providing a free mortgage consultation for everyone here who applies to help you to decide, okay, what should you do with your loan? And one other amazing thing that I really like about Ethan, right, is that if after he and his team, okay, look at your situation and decided, there is nothing to change, you are already at the best path possible, right? They will let you know as well. They will be very honest to let you know, although they may not be able to do your business, but they will tell you, no need to change, right? Which I find it very refreshing, because most of the time, from what I know, right, don't want to say names, but other entities will just tell you to do something because when you do something, it's a business for them, All right. So for those of you who just want to have a health check on your mortgage, you don't know what's going to happen, you want to make sure that you're getting the best rates, or you want to optimize your loan, especially I think just now Mavis is talking about gearing up. Ethan is very good at gearing up. Okay. Right. So for those of you who want to, this is the link over here, right? The QR code as well. I'm just going to post the link in the chat for those of you who are looking at applying for your new loan to get the better rates, basically. Okay. Now, what are the things that you need to fill in? I'm just going to go through very quickly, right, before I go into my spiel about property. Very simple, it's just name, email, contact number. But the important thing at the bottom here, okay, is please let Ethan know what type of loan do you intend to do? Is it a new loan that you're buying a new place, or you're refinancing, repricing, or you're gearing up? Or if you have specific questions you want to tell Ethan, you can also type it in the other segment, right? Specific questions. Then you can check with Ethan as well. Okay. Then once you have this, you send to Ethan. Ethan will have himself or his team member contact you very shortly after this. Hey, correct, right, Ethan? Did I miss anything?
Correct.
Correct.
And to add on to that, same spiel, right? Actually, you see KK got questions such as like his
Is it?
login. Yeah, KK's question is like his login period ends in March 26. Right now, what he should do, 1.58%. The loan amount is less than 200K. Likely, you're gonna go do a repricing. The thing is, I don't know what is the circumstance. So please go in there and put in repricing. Repricing is when you change within the same bank, which means sometimes I don't need to get paid, but the next time when you look for me, I will lah. And
Yeah.
enough of this happens. Yeah, I make myself a comfortable living.
Yeah, exactly. Okay. So for those of you, if you want a very honest, independent advice on your mortgage, you can approach Ethan and his company, and the link is right over here. Okay. Okay. So before I let Ethan off, because I don't want to keep him up for too long. Any question about mortgage, you can put it in the chat right now. Okay. KK is also asking, is this only for private property? It's not, right, Ethan? I mean, HDB is also under your scope, right?
Correct. So the thing is, I love helping HDB people. So the thing is, HDB rates, right, sometimes are 2.6%. At this
That's
point of
the
time,
HDB itself, the HDB loan rate, right? Yeah.
correct. HDB loan rates are 2.5%. If you want to go into private loan rates, I can get you something as low as 1.4%.
Yeah.
I can,
Yeah. So
there are
for those of you
different
who
like,
are buying HDB, you can also approach Ethan on that. Sorry, you were saying something? I cut you off, sorry.
no. For HDB, sometimes their rates are a little bit more promotional. Certain banks will give like promotional rates
Yep.
where they give lower interest rates because you are having a HDB loan. They want to be able to acquire you as a customer and be able to have you as their customer lah. So, just now where were we?
Okay, so I think Joyce has a question for you. Joyce is saying, with all this inflation coming up, right, does it mean that Sora will turn upwards? What's your view on this when you talk to the bankers as well? Was there any mention on it?
Okay, so there is a difference between bankers and people like us. Bankers, they usually, if they bother to, they will read the economic report lah, but most of them, they just worry about their sales figure this month lah.
Yeah.
So what they know versus what we know sometimes might be a little bit different. It is our view that banks are understanding that there are uncertainties, and because of that, they are pricing their fixed rate slightly a bit higher for certain banks.
Right.
But there are 10 banks, and because of that, they got different views, and different views give us different rate. We just take the cheapest one. For now, 2 years, right, can get you 1.35. And the thing is, should you go floating or should you go fixed? It depends on what your own view of the market is. What do you think is going to happen? But is Sora going to go up at this point of time? Effective federal funds rate don't look like anybody wants to project for effective federal funds rate to go up.
Yeah.
So
I
if it
think the
retains the
appetite for
same,
that is very low right now.
if it retains the same, you save quite a lot of money.
Okay. All right. Fantastic. All right, everyone. Can you join me? Oh, sorry. Faith have one more question before I let you go, Ethan. Faith is asking, do you do for commercial property?
We actually do with commercial properties, industrial properties also. do put under others. We'll be able to look at it for you lah.
Yes. Okay, so please highlight it under the other segment over here, right? If you have commercial, you just like Ethan know, then he will be able to cater you towards that. Basically, I think every property you do now. Is there a property class that you don't do?
There, I don't think so lah.
Don't think
But
so lah. Don't
I
think
don't
so.
think so lah. I don't
Yeah,
think
yeah,
so.
yeah. Okay, if not, everyone, can you join me to thank Ethan for sharing his time so selflessly, right, and sharing his knowledge about interest rate with everybody. Okay, please type CCC in the chat. All right, thanks, Ethan. I mean, feel free to stay back, in case and there's any questions for you later on. But I don't want to keep you back if you have any things to go to.
Yeah, no problem.
Okay,
Yep.
all right. Okay, so everybody, once again, this is the QR code and the link for Ethan's companies. For those of you who just want a free look at your mortgage, how can you optimize it, right? Save money. For myself, every time I go talk to Ethan about my mortgage, right, I will save like a few $1,000s a month, right? So, right. So that's the important thing, lah. We want to reduce our expenses as much as possible so that we can funnel all these onto our investment. Okay, and that is what I want to talk about next regarding property. Okay, with that said, right, okay, let me just touch on the rates very quickly. Of course, you already know the Federal Reserve talk about the rates holding steady because they are very uncertain from the war, right? In fact, he said something to the line that really crashed the stock market yesterday, right? He said that the rate forecast is conditional on the performance of the economy. If we do not see that progress, you will not see rate cut. And a translation in layman's term, right, in simple terms, is that if inflation runs hot, oil price stays elevated because of the war, although they are projecting one cut, you may see no cuts, like zero cuts in 2026, right? Which is why I think this is important for property owners, because my take, okay, slightly differ from what Ethan is talking about, right? Is that I think likely the Singapore rates, right, will hold and maybe not go any lower already. That's my take. I don't think it will go any lower from here unless we have a significant drop in interest rate for some reason. Okay? All right. So with that, I want to talk about Singapore property right now. Give you all guys a very quick update and my view on Singapore property for maybe the this year and also next year. Okay? Now, as I mentioned, the prices always get led by the new launches, right? The new launches. So let's talk about the current new launches. Okay. So for those of you who watched my last video, I talk about Pinery, right? On my YouTube channel. And I said that Pinery will launch probably around 2003, 2004. And I say that the crowd that it will attract will be huge. And indeed, it was huge. Pinery over the first weekend attracted 8,500 visitors. In fact, this is, I think, a higher number than your River Modern and so far. Okay. And I was just there last night, okay, because one of my one-on-one member is actually applying for it, right? So I was there taking a picture. I think I was the only non-agent that was standing up, because because all those people who are buying, right, you can see, they are seated down, right, listening to some of the market updates provided by the agencies at Pinery. And I was very pleased with myself because I think I got my prediction about just right. Okay. Right now, if you look at the launch price, it is roughly between 2003 to 2004. Roughly going to be that. Okay. My personal prediction is that I think Pinery, if pricing at this level, is we are potentially, okay, and this is just my prediction, okay, potentially, okay, why don't I ask you? What do you think will be the sales percentage for Pinery? Okay, because I give you data lah. The last round, River Modern, and this is CCR, sold 90% at an average price of 3,200. Okay, this one, the average price likely to be 2004 plus, maybe 2005. Okay, so everybody, this is just for fun, type in the chat. What do you think will be the percentage of unit being sold by Pinery Residents next week? The ballot is next weekend. Okay, what do you think? Ready, go. Okay, type in the chat. Wow, so Christopher saying 90 plus. Okay, what else? The rest of you, what do you think? Some of you like, hey, really, can or not? Hey, by the way, if you don't know where Pinery is, it is at Tampines, okay, which is quite far out in the east, in my opinion. Okay, And the rest of you got no opinion. Anybody else? Anybody else want to guess how many percentage will be sold? A say 99. Wow, I don't think so. 99 very 夸张 eh. Okay. Okay, why? Because I don't think there'll be 99 because there are some 5-bedder luxury, which I think there will be no takers in the initial stage. Later on, it will be sold. But at the initial stage, usually this kind of prices, the 3.5, 3.21, okay, more likely around 3.7 to 4 million, will not be taken out immediately. Okay. So my personal prediction for Pinery, okay, and I agree with quite a few of you, is that I think it's gonna be around 80% sold on the first weekend. 80% sold. Right? Not as shit hot as River Modern. And the reason is because, sorry, pardon my language, is because there is also the Resale EC that's going to launch just 1 week apart from Pinery, right? So there will be some demand that's being drawn to Resale EC, but I think by and large, Pinery is going to do really, really well. Okay, when I go there, I talk to the people. I met like a couple of you there, right? I don't know whether you're in the live stream, and the interest level is very high. Okay, now what has that got to do with Singapore property? Is that this also gives us a sentiment, right, towards where we think property prices is going to be, right? And one way to really look at property prices is to start from even before new launch. Now, guys, what is before new launch? Some of you are scratching your head, huh? Pete, there's something before new launch, right, man? I thought new launch is the very, very beginning of a property already. What else can be before new launch? Okay, can anybody hazard a guess? What am I saying when I say there is something before new launch? Either VVIP ballot. No. Yes, very good. Wow, you guys are very sharp, okay? And it's known as the government land sale, right? So this is something that I always highlight to my one-on-one member is that to be a successful property investor, you must monitor government land sale because that tells you what is the property price gonna be in a year or a year half time, right? And it's almost cast in stone, right? Because if you know the land price, okay, and we roughly know the construction price, the cost, that will give us the new launch price. And this generally doesn't deviate too far. You can almost get it down to within 5%, 10% variation. Okay, so let's look at some of the government land sale that happened recently. One that I'm personally super excited about is this one. Right? So finally, URA has released the reserve lease GLS for this place called Jurong Lake District. Right? So previously, it was a super mega government land sale. It involved like the condo plus all the peripheral things. And end up, what happened? End up nobody got it because there's only like 1 or 2 bids and the bids was like too low. The bids was way too low. So URA said, no, I'm not gonna reward this. Okay. But the good news is that they finally released it. Just the condo itself. It doesn't come with all the auxiliary services that you need to build, right? Your parks what the community center no need to build already. Okay. And this time round, I find the setup very, very attractive. Why? Number one, it is going to be one of a mega project, 1,200 units. Okay. And it's a mixed development that, you have your office space, you have your retail mall, you even have your food court, supermarket, and they say that you are connected to 4 MRT lines. And I was like scratching my head, huh? Got 4 MRT lines, man? Okay, so when I look at the map, okay, indeed, it looks like there's 4 MRT lines. Why? Because it is actually right in the middle of 2 MRT stations. If you just cross the road, over here is Jurong East, and over here is Jurong Lake District Station. Okay, so when I calculated, yeah, it's really 4 lines. So this is going to be a very hot one because the Jurong East area has been very short of condos. Very, very short. Right? You only have your J Gateway, your J Cube, then that's it. Don't have already. The demand is very high here. And the thing is this, now that it is near 2 MRT stations, within walking distance to 2, what is the possible land price that we can potentially look at? Okay. And in reference, what I do is I look at the most recent land sale that is at the Lakeside MRT that was last year, June. And CDL actually bid for 1,132, which is actually quite a high number, for West Side, to be very honest. Okay, so and I look at the others. For example, Tanjong Rhu GLS went for 1,455. CapitaLand and UOL together bidded for the Alkang Central one, which is also a similar type of project, a mega project, mixed use development near MRT, and it was a 1.5 billion. The price was 1,179. Okay, 1,179. So for me, when I look at this, my estimate is that I think potentially the land price will actually end up around 1,300 to 1,400. Okay, so with that, let me ask you before I press my next button. This is the land price. This is the GLS price. What do you think will be the launch price? If this is the GLS price, I'm estimating, what do you think will be the launch price? So I want to see how many of y'all are in tune with the market, how y'all like, very sure, that kind of thing. Okay. So Candy says 2,000 per square foot. Kelvin says 2,000 per square foot. It is way too low. It is way too low. If this one launched at $2,000 PSF, right, it will be sold out 100% on the first day. Why? Because right now, if you think about it, you look at a lot of Lentor area, it's already selling at 2003, 2004. And it's not as central and well connected as Jurong East, Yeah, okay? So I see a lot of 2008, 2007, 2004. Okay, my personal take is this. It will minimally go for 2006 PSF. And at this moment, I can imagine and even hear from your microphone that is not turned on, the gaps, Jurong East, 2,600 PSF. And my answer is yes, indeed. Why? Because if you think about it, right, you just take Pinery as an example first. Pinery is already going at 2004, 2005 PSF this year. This year. And arguably, this Jurong East location is more central, because it's way more connected, more shopping malls, right? You have all your Jurong shopping mall over here, right? You even have hospital as well. And so my take is very simple. It cannot sell lower than Pinery. And it's going to launch like maybe 2 years from now, probably. So you also have to add in a few years of inflation, a few years of oil price being very high, right? So my personal take is I think it's going to be at least in excess of 2006, right? And if you look at Lentor Central GLS, right, like what Desmond just said, absolutely right. Because Lentor Central, okay, which to me is not very central, because Lentor is not the central of Singapore, no, but okay, maybe central of Lentor, okay, right? Let me show you how it works. Okay, so the first plot of Lentor, okay, do you all remember what was the first plot of Lentor that the condo that was first built here? The Lentor got many plots. You see all these plots, right? The first one is, yes, very good, Lentor Modern. Okay, Lentor Modern back then in 2021, the land price was 1,204. Subsequently, we had 900, 1,100 PSF for Lentor Central Residences and also Hillock Green below it. Then we have Lentor Hills, which went for 1,000 PSF, right? And we have Lentor Garden, 920 PSF. Lentor Mansion, 985 PSF. And finally, we have Lentoria, which went a bit higher at 1,130 PSF. Okay, so the most recent one is here. And Desmond already told you all the answer. The answer is that it actually went for a record 1,278 PSF. And this one is a standalone project. It is not connected to the MRT like Lentor Modern. It does not have a mall, if I'm not mistaken. Maybe it has, but I don't think so. Right? So it's a standalone project and it's selling at 1,278. So if you compare this one to those standalone that is just beside Lentor Modern, the jump is very significant. It's 100 plus PSF. And mind you, the important thing is that Lentor haven't finished yet. Still got 2 more plots here, no? Okay? So with that in mind, you might be thinking, wow, those people who bought Lentor Modern, right? They'll be in trouble already. How to make money? How to make money from this, right? So what I did was I look at currently the sub-sale transaction for Lentor Modern, because Lentor Modern actually people already collected keys already. For those of you who bought Lentor Modern, right? You will know. You already collected keys. Some people are renovating. There's a lot of activity. I just went there a few days ago, right? So far we have 18 transactions in sub-sale, all profitable, okay? And if you look at it, okay, this might be a bit small, but if you look at it, this guy's 4-bedroom made 400K. This 4-bedroom make 500K. 3-bedroom also make 400K, right? So on average, so long you don't buy 2-bedroom, just go and buy your 4-bedroom, 3-bedroom. You all make money. All make money. And it's a good amount of money. From 2022 to 2026, 4 years, every year you make 100K. Right? Okay? On average, about 100K each. So actually, what we can see from this or derive from this is that the land prices are definitely increasing. Land prices are definitely increasing. Similar plot of land beside Lentor Modern, right? Because if you compare to Lentor Modern, not fair. Because Lentor Modern is connected to MRT, has a mall underneath, whereas the rest are standalone projects. So it is more fair to compare maybe these 3, these 4. And you can see how much land prices has gone up. In fact, Lentor Central, the most recent GLS, is even higher than Lentor Modern's price. And yet, Lentor Modern, with so much supply, Lentor Modern, the sub-sale is still making good amount of money. So what does that tell us? It tells us that the buyers themselves are predicting that the prices will be higher. And what are the prices they're buying at? What are the prices they're buying at? You take a look. The 4-bedders are the most reasonable PSF. It's still below 2K per square foot for 4-bedders. But if you look at the 3-bedders, they are already reaching 2,000 PSF. So what does that mean? That means when they look at it, they say, hey, this one, the land sale went for 1,200 plus. Then I calculate. Okay, so guys, let me ask you, 1,200 plus, when they launch, how much will they sell? How much will they sell? Probably my guess is around 2003, about there, around there. So what people are thinking, or in fact, some of my one-on-one members, I told them, if you like Mentor so much, don't need to go for this. You just go for this. Why? Because you are buying the main project, the core gem in the middle, and you are not paying 203. You are going to pay 2,000 per square foot. So yes, the first round of buyers seems like they made a lot. But if you think about it, the second round of buyer that goes in, they are actually getting a pretty decent deal. Because my question to a lot of the one-on-one members is, Pete, I want to buy new one. Then I said, no, you think about it. Where can you buy $2,000 per square foot these days for a condo that is maybe not in Pulau Ubin? Think about it, right? So is it very expensive? If you don't look at the profit level, is it very expensive based on PSF? It's actually not. It's actually not. So few takeaways that I want you all to know is that land prices are increasing, right? And therefore, it is pushing up the broad prices. Even in areas like Lentor, which is very, 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 like, flooded with condos. 很多a lot. You count 1, 2, 3, 4, 5, 6, 7, 8. These two, if you add together, 10. 10 projects all clustered together. And yet Lentor Modern still can make a good profit. What does it tell you? Is that the demand is very high, right? And yeah, so that's the main thing. Okay, let me see. CI is asking, why does Lentor plot command such a high price? So I think the developers are very clear-eyed about it. They are looking at currently what are the other GLSs. For example, Tanjong Ru went for 1,400, right? The Tampines land sale previous round already went for 1,100, 1,200 already. So it is already at that price already. That's why I think Coco Land decided to give a commanding bid to make sure that they secure this. Because this is probably the last decent plot short of the other two. The other two, will it become condo? We don't know. But this is the last plot that is already projected for condo. Okay? All right. Okay, very good. Christopher, shouldn't it be the sales price column for second buyer? Yeah, so this is, sorry. Yeah. My mistake. I'm referring to this. Oh, Christopher, you just made the situation look even worse. I was thinking to myself, actually 2,000 very cheap. Oh. So Lentor right now is commanding at 2003 to 2004. So now can you understand why Pinery is selling at 2004? Can you understand why? Can you understand why Jurong is commanding those prices? So right now, even at the outskirts OCR, the resale, even for 4-bedder, I'm not talking about 5-bedder or 2-bedder or 3-bedder, 4-bedder, big size is going at 2003. This is the current purchase price. 2-bedder is hitting 2004, 2005. Right? And a lot of people say, oh, maybe this is hype, maybe this is FOMO. And I say, you will see FOMO and hype in stocks most of the time. Why? Because I can just buy one stock, two stock. I can buy one share, two share. But property, most of the time, most people can only buy one. So to have hype is very rare because you cannot buy multiple. Right? If you can over leverage, then yes, there's hype. But Singapore, you cannot. There's 50% TDS. Right? So you get it. Like Lentor is selling at this price. 2004. Right? So if Pinery can sell at 2004, 2005, I think it's not too bad. Okay? So yes, Christopher, thank you for highlighting that. Okay? All right, so let's go to the next one. So I think the potential launch price will be around 2003, 2004. Okay? Now, if you look at the general new launch in 2025, okay, you look at the prices, it will sort of tell you where are the prices looking like already. For example, OCR, okay, so for example, the Tampines Parktown, Springleaf, right? These are OCR. They are going at about 2001 on average to 2003 for Parktown, right? You can see that over here for Lentor Central, 2200, right? Alta, Faber Residences, 2001, 2005, right? It's considered OCR, Clementi is OCR. If you look at RCR, then you're looking at higher prices, 2007, right? Kim Seng Road, even higher, 3000 PSF. Margaret Drive, this is Penreef, this is Promenade Peak, going at 2008, 3000 PSF. Then if you turn around, look at CCR, that's where your eyes start to pop out. Okay? Right? River Valley Green. Wow, this one sold like 90+% one. Okay? 3,100 PSF. You look at Orchard Boulevard, look at Unity Street, Robert Opus, 3,300 and above. So how, as a buyer, I think one thing is that you need to start to adjust your mindset towards property prices. Okay? Is that my personal thinking prediction is that now going forward, if you're buying new launches, OCR will be 2004 and above. OCR 2004 and above. RCR 2007 and above. Right? CCR 3001 and above. So that's why when OCR back in 2021 was selling at 1,000 1,300 PSF launch, 1,400 PSF launch. I was just telling my one-on-one member, no need to think too hard on that. Right? I show them the data. I say, hey, this is the data set of all the resale nearby. This is the rough demand here. Right? You have transportation, things looks good, land prices keep going up. What do you want to worry? Right. So to be very frank, a lot of times people come to me, they what they want is an objective view, numbers, data driven. But in addition, you know what else they're looking out for? What else they're looking out for? They just want to borrow confidence from me. They look at the money, they're like, cannot, can we buy it? Right? So that's where I also help the clients. Because like I say, a lot of them, this is the one purchase. You cannot buy 2-3 property at one go in Singapore. Very hard. The additional buyer stamp duty will kill you. Right? So that's what I do, is to give logic, give numbers, give data, and arrive at confidence. Okay? So this is the price, the PSF they're looking at already. Okay? Generally, I would say broadly, higher land prices will definitely push for higher launch price because there's no way developer will sell for a loss. No way. They will at most sell for break even, but they will never sell at a loss. And if you look at River Modern's demand, you look at River Green's demand, you look at Pinery, so many people going to watch the show flat. One thing that tells you very clearly is that the buyers are very, very strong. Okay? The buyers clearly can afford it because this is the one purchase they're going to make. Right? And this one, you cannot say, oh, I over leverage. The system just doesn't allow you. So within the the TDSR, your 55%, right, and all the other regulations, it is still selling out. So it shows you that buyers clearly can afford it, right? Which is why a lot of people have a lot of worries about, hey, wow, Pete, this one sustainable or not? And I said, when everybody can buy one and the prices still can go up, everybody can only buy one, and the price still can go up like this, it shows you that it is supported by strong fundamentals, right? Because you cannot go to the bank and say that, hey, I got no income, let me buy 10. You cannot. You just cannot. That means there is a fundamental support for that price. Okay. Now, one more thing is that there's another data point that you need to watch out is that other than demand, the supply is also very important. Okay, so let's talk about supply very quickly. I know a lot of you got questions. Later we talk Q&A. This is the fourth quarter real estate 2025. Okay. And long story short, I basically copy and paste the same chart from Q2 2025 all the way to Q4 2025. And what is this? This is basically the expected year of completion of the condos, be it private or EC. And what this means is basically projects that's going to TOP, right? TOP means you get the license to move in, start renovating, right? And the year that I want you to focus on is 2026, 2027. Okay? So in the second quarter 2025, over here, this one, 2026 was about 8,195. Then the next quarter, it dropped to 7,878. Then the latest one, they projected drop even further to 6,955. And the same can be said for 2027, right? 11,200, 10,200, 10,000. So what's going on? Is that the completion of projects, the TOP projects are really being rolled back for some reason. They just cannot complete in time, right? So what this means is that there's going to be also a supply shortage because the supply of property comes from three aspects. One is resale. The other one is TOP units. And of course, new launch, right? And the majority is actually in the resale. But the TOP units also represent a huge amount because you think about it, 7,000 units is like, I don't know, 10 projects, maybe 10 to 12 development projects, right? So it's not a small number, right? So when I superimpose all the various years together, so this is the by year of completion, the number of TOP units since 2019 to what they projected right now. You can see that actually we are facing a very supply crunch in 2026, starting from 2027 already started, right? And 2027 only improved by a little bit, right? If you take an average, the average is around 13, 14,000, which we are not expected to reach until 2029, currently, based on current projection, right? So what I see in the market is that not just demand is high, but potentially this year the supply is also a bit shorter because the supply is lower because the TOP unit just not enough. For those people who cannot buy TOP unit, what would they buy? So guys, let me ask you, people who wants to buy TOP unit, they want to move in immediately. They cannot buy TOP unit. What would they buy? What would they turn to? Okay. Yeah, exactly. They will turn to resale, right? Now, why wouldn't they turn to new launch? The very reason they buy TOP unit means they want to move in now. So they have no choice but to move to resale. So I do expect resale to have a bit of uplift in price from here also. Okay. And another factor is this, is of course you keep seeing all this, right? HDB sales price, Dawson 1.7, Bishan 1.6, 5-bedroom. Even Bukit Batok 5-room flat just breached $1 million. Right? And all these sellers, I'm not sure, I don't think all of them, but I think a good amount of them, when they sell, they also will move into the private sector, the private property side, right? So to me, all in all, this is a summary slide, is that there are many reasons pushing for potentially higher prices. Number one is higher land sale, right? Number two is, like I said, the supply is very low, lower, not very low, lower. Number three, lower interest rate. Currently, the interest rate is already sub 1 if you look at Sora. that also means people can borrow more and potentially bid for higher prices, right? And one thing that got all these HDB to be so high, right, is also potentially, that's my speculation, is the introduction of prime and plus flat. So people who want to buy prime area, good location HDB, they say, if I go for prime and plus flat, there are a lot of restrictions, right? You cannot sell for 10 years, you cannot rent out, you have clawback clause. The clawback clause, I think current speculation is like 12 or even 20%, which is quite crazy. So if I'm someone who wants to buy HDB in the very good location, I'll be like, maybe I just go buy resale, right? Which is why you start to see these kind of prices. But that in turn, while pushing up HDB prices to be higher, it will also flow to private because there's a big group of private buyers who are HDB upgraders. They sell the HDB, they move over to private property, right? So in a way, this has a spillover effect. And of course, last but not least is definitely higher building costs due to inflation. All right. So overall, right, I don't know if this is a message that is music to you. Some people who haven't bought will be like, wow, die already, this jialat already. Okay, but later I got some good news for you lah. Okay, is that overall, I think prices are still increasing, right? In fact, if you look at last year, if you compare last year growth to 2024 growth, okay, while HDB growth has significantly come down, surprisingly, private property has held about level 3.9, 3.3. Even rental, from previously rental dropping down, for those of you who are renting property last year and this year, you will notice that condo rental has been going up. Do you notice that? Do you notice that condo rental prices has been going up? Right? They say 1.9, but I can tell you for quite a few of my one-on-one members, I did see their rental prices go up by as much as 5% to 6%. Not 1.9. Okay, this is an average. This is an average. Okay, because you can see the 1.9 is an average. If you look at across different non-landed property, right, it's actually higher, especially RCR, 2.8%. Okay, so what's my prediction for 2026? I think this year, likely, I think property prices will go above 3% still, right? So another 3% growth this year. And it's compounded, it's not annualized return, it's compounded, right? So first year 3%, the second year 3% actually is a little bit more than 3% already. Then this is going to be another one, okay? And I think especially the good condos and landed property is going to benefit the most. Okay? Yeah, so why is this happening? To me, it's very clear. Another reason why I think property price will continue to go up is when the world is very uncertain, oil price very high, stock market seems to be not doing the best. We are not going to get any rate cuts. Inflation tends to be higher, right? So what we are seeing here is that we are seeing inflation increasing, but at the same time, we are not seeing that the growth stock anything to do better. The bond market is already telling us that, the yield is increasing. By right, usually if it's a recession, you will see bond price drop because more people buy bond. Okay, but right now what we see is that, stock market don't do well, bond price also don't do well. What's going on? But we are seeing inflation. Okay, so everybody, what is this called? When you have inflation, but the economy is not doing too well, what is this called? Is it very obvious? Okay, yeah, Kelvin already said stagflation. Yes, it is going to be a stagflation. It is not a recession. Now, what is the difference between stagflation and recession? Is that recession, you will see asset prices drop because people cannot afford anything. Inflation doesn't come, but the economy just in shambles. So that's recession, right? So that's kind of what we saw during the early parts of COVID, where you saw property price start to drop, right? Bond prices start to shoot up because everybody switched to bond, right? So bond prices shoot up, the bond yield go down. But what we can see right now is likely to be a stagflation signal, where asset inflation will happen because of inflation going up with very low economic growth. So in this environment, I want to own assets. I want to own hard assets, especially real estate. Because to me, it's this. When it comes to a stagflation scenario, if people want to liquidate and raise cash, okay, so let's see if I'm correct. Guys, touch wood. If you need to sell your investment to raise cash, which investment type will you sell first? which asset class will you sell first? Right? So Kelvin says stocks. Right? Percy says stocks. I think some of you are I got DM say crypto. Correct, right? So you will sell your crypto, right? You will sell your crypto market, your stock market, right? Or maybe your bonds, right? You will sell all these first. Property is most likely the last thing you will sell. Real estate. Why? Because it is not that easy to sell quickly. Plus, you are possibly staying in it. Right? Which is why during COVID, we saw that stock market drop by close to 40%, but the property price dropped 1/4 by 1% and then recovery. Right? Kelvin said, how about gold? Gold drop. Yeah. In a recession time, maybe gold will also drop. If you need to raise cash, you will sell gold first. Between selling gold and selling property, which one will you sell first? I think by and large, people will sell gold first than to sell property, isn't it? Right? Because you can sell in small chunks. Property, can you just say I sell half a property, raise half? Cannot. Can I sell the toilet only? Cannot. Right? So to me, which is why my portfolio is like this, is a very well balanced. Is property and liquid assets such as gold, stock market, all this. So it balances out each other. Okay. But with that all said, right, is that, is it that, wow, that's the end, cannot buy property, right? Is that what I want you to take away with the mindset is that, hey, that means property actually still is a very viable asset class. Okay. I hope that I didn't give you the impression that, wow, prices are running so hot, so fast, I cannot invest anymore. Okay. Because I can share with you an actual case is that in 2021, when I was telling, when I was telling them, hey, you need to look at property prices. Okay. And I said, hey, you want to look at this property is not bad. Okay. Okay, I just realized my screen, the chart is not showing. Okay, let me adjust. Okay, there it is. All right. Okay. Okay, so let's go back to the chart. So back then, I was saying, hey, this one is a OCR project, 2021, right? We were just maybe starting to finish up COVID. Okay, and it was selling at 1,300 per square foot. Now, at that point in time, the neighboring were all selling at 1,001 or maybe at most 1,200 PSF. So on the surface, it does look expensive, right? A bit just like now, when I tell you, hey, OCR selling at 2,400 per square foot, you'll be like, so expensive. Back then, when I tell people, hey, OCR selling at 1,400, the reaction was also the same. Why? Because people are very used to seeing OCR condo selling at 1,000 PSF, 900 PSF, right? But today, what is the most recent sale? The most recent, the actual unit that my one-on-one member just sold. They bought it at 1,368. They sold it last year, June, at 1,727. 328K gain, close to 400 PSF gain. Right? So one thing I want you to take away is that it is never about whether the price is high or not. It is about fundamentally, does the data and the numbers show you that the price can be further supported? Right? And to me, it does shows like the current prices, however high it may be, it does seems like the case is quite strong, right? And I received this from the one-on-one member. I'm very happy. And this is why I do what I do, right? Because I don't want to just hoard myself. I don't want to just be wealthy myself. I want everyone around me to be wealthy, right? Because investment is not a 1+1, not a zero-sum game, right? Everybody can be wealthy together. But actually, I tell you one thing, this case, right, why I show you all, right, is also because it's a very good case study. Because when they sold, right, I was telling them, hey, actually, y'all can do better. Y'all can do better one. Okay, so you want to make a guess, right? What was that one thing that I said they can do better about the property plan? Right? They already bought the property already. Right? And they say, hey, Pete, I want to take the profit already. Okay? And I say, really? But you can do better. What else can I do? Right? Okay, so Kelvin say rent it out. Yeah, they already rent it out. Actually, they rent out for 1 year already. Then they sell. Right? But they told me that, okay, Pete, we have other plans. They are coming to retirement. So they say they want to start retiring, take profit, and then, which I think is absolutely correct. Nothing wrong, right? You want to retire, I think that's absolutely right. But if you can actually not sell it too soon, because you can do better. Why? Because now in 2026, okay, so without y'all looking at the chart, just now I show you all right, the PSF back then was 1,700 in 2025. Okay. Right now, what do you think this particular project is selling at, the PSF? Okay, what do you think it is? Make a guess. All right, ready, go. What do you think it is? Let me drink some water. And there's a lesson to be learned later. Okay. Okay, so I see 1,009, Lei Hun say 2,000, Suresh is 2,000, Kelvin 2,005. Wow, Kelvin, you crazy. How can 1 year jump so many? Okay, right? So the answer is this. This year, so far, the 3-bedder there, okay, is selling at 1,008 to 1,009. So what does that mean? Is that if they just hold on for 1 more year, they could get about $100,000 more. Just 1 more year. Okay, they can get about $100,000. So one thing that I also always share with my one-on-one member when they come to me, right, is that, hey, after TOP, right, don't be so urgent to sell. Why? Because usually after TOP, a lot of people selling. So the price will stay a bit suppressed for a while because the sell pressure is very high. But once those people are already out of the picture already, you can expect the price to start to appreciate nicely. Why? Because that's the general pricing that is commanded in the area, and they will do catch up, right? So after TOP, generally my personal suggestion is that hold for at least 1 to 2 years. If you can, 2 years to just let the price jump a bit more, right? And then you make another 100K. Okay, so for me is this: I'm not an agent. My job here is to provide research, is to provide data, is to provide numbers, is to provide confidence. Okay, and I never advocate people like, wow, buy already, right? Straight away, every new launch flip, every 3-year flip. To me, that doesn't make sense. Why? Because if you every 3-year flip, your profit will get eaten away by one thing, which is your buyer stamp duty. Every 3 year you flip, there's one buyer stamp duty. There's one agent fee as well, right? Then end up your profit not very high. I rather you hold longer, hold 4 years, hold 5 years, then you sell. The buyer stamp duty is still around the same, but your profit is a lot higher. Make sense? Okay, so I hope this is something that you all can bring back at your own property plan. But this is new launch. Does it mean that resale cannot make it? No. Actually, if you pay attention, just now what I say is that the demand for resale is going to be higher because the TOP unit is getting lesser, right? So in fact, just now the property price talk about, general property price go up by 3%. If you look at resale, okay, so this is another project that my one-on-one member went for, okay, and I don't want to cover the numbers, right? I just show you upfront. It's a resale project. They bought in 2021, okay, and they sold last year, September 2025. Slightly bigger unit. This is the result. They bought at 1,271 per square foot. The same unit sold for 1,950. It is a 800K gain, close to 700 PSF. And it's the same timeline, right? So what does this tell us? Is that actually it is not always new launch that is the best deal, right? I don't know about you guys. This is something that when I talk to my agent team, right, I always say, guys, we must have integrity. We cannot always tell our one-on-one members or clients, right, that resale new launch is the best, new launch is the best. No, it's actually not true. Right? The data shows us very clearly that resale actually can outperform new launch on many occasions. Okay. However, right, but there is always a but. The but is that, of course, resale is a little bit tougher. Is that you need to have more work put in, you need to do a bit more research to make sure that you find the correct unit. Because unlike new launch, where you have the whole block to choose, a lot of times when it comes to resale, one development maybe only have like 4 or 5 units to choose from. Then if you don't have, you have to switch to another development. So you must always have a plan. This area I like, which are the few units I like, which are the new development I like. Okay? Right. So one thing that I want to caution everybody, while I'm still positive for the market in general, by and large, I'm still quite positive, right? This is something that I actually heard last night at the show flat. One of the management say, they say, during COVID, anyone can make money, but now it's different. And I agree with him, right? Is that please do not buy on impulse or so-called anyhow buy, right? You still must exercise logic and numbers. Okay? All right. So This is my sharing on general property market update, right? In the future, I will share more specific example, but I hope that this gives you a very good broad understanding what's happening and the confidence level. Okay. And with that said, I want to share with you guys the good news is that after Chinese New Year, after I go and be tall, right? Okay, I'm finally back at work. Okay, is that the Invest with Pete 101 property coaching is finally reopened. Okay, so this is the link over here. This is the QR code over here. For those of you who want to, each time I will only do 15 slots, right? 15 members lah, basically. The reason is very simple. The reason is not that I don't want to do. It's because unlike stock, where I can just do research and send to everybody because by and large everyone can use it, right? Property is very personal. Property is very personal. So it's a bit more time consuming, right? Okay. So for those of you who know me, you know that I was I am still an investment manager, right? My primary focus has always been on stock research. So after managing my client's portfolio for a while, right? Then there's always a question is that, hey, Pete, what about property? Can you help with that? And that's when I started to research in property and I said, hey, actually, in a way, I was barking up the wrong tree because for most of my clients or my members in Stock Market Genius or Dividend Market Genius, right, my investment side of the picture for stock market, actually their biggest portfolio is not their stocks, it's their property. I don't know, is it the same for you, right? So that's why about 6 years ago or 7 years ago, I started to apply my stock research framework onto property investment. It started off just doing for my investment clients, and right now it is a full service that I do with a team of people, right? To work with the clients to make sure that the plans that they have is solid and they can enter it confidently, right? So to date, about 240 plus clients, right? Profitable cases, right? So this to me is very fun. I love it because it is very dynamic. It is very tailored. It's very to individual. And I like to talk about property in general, right? So while it's time consuming, I really enjoyed it, which is why we can only do 15 cases at any point in time. Okay, so right now it's open. The link is over here. The QR code is over here. But I just want to say one thing, is that for those of you who are looking at this, the important thing to remember is that this is not a sales pitch. I'm not here to tell you what to buy, this to buy. Okay, what I want to do here is I'm not a property agent. My job here is to provide research. I give you deep analysis and I put it in front of you, right? I cook the food and I put it on the plate and I put it in front of you and say, okay, these are the data. Which one do you like? Which one works for you? And to me, that is very important because there is never one property rule them on, right? I don't know out there, there are a lot of people who talk about, wow, this is the best property ever, you should buy this. Then the next one, the new launch come out, right? The next new launch come out, oh, this is another best property, which is not true, right? There can always be more than one good property. And I just do the analysis and I share with you guys. Okay. For those of you who are applying, I also want to make sure that you all understand what is inside the coaching so that there's not a mismatch of expectation. You know what you're coming in for, right? So number one, it is a one-on-one analysis, right? I want to help you to find out what can be improved and what needs to be changed in your portfolio. Whether your current property is good or not, do you need to sell? Do you need to sell already and buy, or just keep it? It's up to you. Okay, right? And to know where the high demand areas are, you can clearly see that if you know the high demand areas, like what I share with my clients, the result is very different. The overall property price index says 3%, but you can clearly see the improvement in some of the projects here is not 3%. The profit level is not 3%. Okay? And you get access to my top buy list, right? Where I think these are the good projects, but I will still tailor to your needs. A good project, to me, to one person, may not be good to another person. So that's the part that really needs a lot of deep contextualized analysis. Okay. And I work with a very strong team, which includes Ethan as well, right? So we have a team of handpicked agents that I trust, mortgage brokers, and also lawyer to serve your interest. So I put everything together as one-stop shop because last time when I worked with clients initially, I thought, hey, this is the plan, quite good. Okay, can we take the plan and go lah? Then when I take the plan and go, right, what happened? They find someone that, don't understand my analysis, maybe not very trustworthy, maybe not very reliable. End up the plan didn't get carried out, right? The agent that's not very reliable had different plans. So end up they didn't get what they want. They didn't get the correct property, in my opinion, right? And a few years later, they come back and say, hey, P, I didn't make money. I say, huh, what happened? How come? Right? So from there, I decided, no. I cannot let this happened. I spent so much time doing the research. I spent so much time making sure that the analysis is rock solid. I must make sure the execution is also good. That's why I decided to work with a selected group of people to make sure that the plans get carried out nicely, right? And of course, Ethan is one of them as well. Okay, so this is what you get in property coaching. And lastly, to me, the most important thing is remove the guesswork to have that certainty and that confidence. And it's not just certainty, confidence by me just talking to you like, oh, good lah, good lah, good lah, just go and buy. No, it's always about data and numbers. Set the emotions apart and we ask ourselves, based on data and numbers, is this a good project? Right? And so far, very happy to share over 240 cases that has done really well. Okay? All right. And okay, I got 2 DM already. Wow, you're all very interested. Okay, so you're asking, okay, how much is this? Now, I just want to be very upfront. I know out there are people charging 5-figure on this. Honestly, I don't think it is a very ridiculous price given that you're buying a multi-million-dollar property. Okay. But I think it's crazy if I can work it a deal for you guys. Right. So when I help my clients, I actually help a lot of them to save that 5-figure. In fact, I just want to be very honest. I do know of members who come to me after they paid the 5-figure to some other people and they still couldn't execute the plan. Then they come to me for help. Okay. So what I want to do here tonight is that I want to work out a deal for you, right? To make this free as much as possible. Okay. So I don't want to I am not able to share too much details here. Okay. But what I can assure you is that when you apply, my team will reach out to you and will share with you how is it possible that I can do all this for you, right? That people charge 5-figure out there for free. And I will leave that choice to you ultimately, whether you want to take it on or not. All right. So I want to be very upfront here. There is no gimmick. They will share with you the exact details how this consultation could exactly be free. But if you choose to pay me, then there's also an option, right? But I would say most of my clients choose the free option. Okay. All right. So the choice is ultimately yours, but I just want to let you all know that I'll do my best. Okay. So this is the Invest Repeat Property Coaching, right? And the link is over here. The QR code is over here. Okay. 15 slots. Once this 15 slot is full, I will close it until I clear the 15 slots. Then we move on to the next 15. Okay. So at this point in time, I just take some questions. Okay. Okay, BT is asking, with more AI adoption, increasing unemployment rate, will it affect the purchasing power, especially big ticket items like property in short term coming years? Okay, so can I say something very sensitive here? Okay, so maybe at this point in time, okay, no need to pause now. I think this is fine. Okay, to me is this AI disruption will affect a certain sector of the economy, right? And I would say most of the time, it would not really affect the top 15 to 20% income earners, right? Because their skill set is hard to replace. I say this again, the top income earners, their skill set is actually quite hard to replace. There is a reason why they are paid so much in the first place. Okay, so think about it. One example, right, that I know of is that people say, "Hey, Pete, next time AI can craft contracts. We don't need lawyers already, what?" Right? So if you remember, I work with a team of lawyers. So I asked them, "Hey, you're worried, no? Right? Next time people buy property, don't need to go through you already. People just do their own contract, right?" And they say, "Pete, no need to worry. There will always be a demand for lawyers. Why? Because it is not just a contract. It is not just the contract executing. It is about what are the various things that can potentially happen, what are the out of the ordinary things that has to be done, and ultimately you still need a lawyer to get it done, right? So that's an example that I can give you. My take is that it will not affect the top 15, top 20% very much, and therefore, I don't think it will affect private property prices very much. Would it affect HDB prices? Maybe. For example, if full automation comes in AI, we don't need drivers anymore. Every car can go on its own. Will the private hire car buyers be a bit in trouble? Potentially. Right? So it really depends on skill set. That's what I'm saying. So therefore, I don't think private property prices will be that affected. Okay. Let's see. Okay. Suresh, when will Alkang integrated be open? Wow, I think Alkang will be next year. I think so. Maybe early next year, not so soon. And my view on Alkang is that it's potentially quite good. There's cross-island line and whatnot, but also depends on the price. And Alkang traditionally has been quite a sleepy town. I don't know whether you realize. There are past new launches there that didn't do as well as people thought it would. Back then, there are people who told me they want to buy Florence Residences. I said, no, please don't buy Florence, right? You buy the other one, don't buy Florence. And true enough, right now you go and look at Florence, actually the growth is not as good as what people expected. Yeah. Okay. All right. Okay. I just want to run through some FAQ. I think some of you may have questions. Number one, if I'm applying for the property coaching, if I don't know my budget, can or not? And I say can. Just make sure when you apply the application form, give me your latest number so that my team can actually calculate that for you. Okay? If you don't know your loan amount, very simple. Go and talk to Ethan, okay? Okay, Ethan can help you with that. Anyway, those of you who applied to my one-on-one, Ethan and his team will be there to help you also. The next question, very commonly, people ask me, hey, Pete, is this only for private property? And the answer is no. Okay. I also help clients on HDB and also landed property. The demand for landed, the inquiries of landed has been quite high as well. For those of you who are looking at landed, you can talk to me during the one-on-one. It's a separate thing, right? It's very different from HDB and private condos right now. Okay. How many sessions, right? So usually people ask, hey, Pete, thanks for doing this, right? And you managed to do it for like almost free compared to what is being charged out there. But how many times can we consult you? And I will say as many times as it takes to get the deal done, right? So to me is that I'm focused on the client. I'm focused on each client. Therefore, I can only do 50 at any point in time. Okay. So it's really for 15 only. Those of you who applied after the 15, my team will still contact you, but let you know that you're on the waiting list, right? So I don't want to give you all the false expectations. You're like, hey, Pete, how come I cannot get in? I apply already, I don't get in. Okay, because we want to make sure that we give our best to the clients, right? So we can only do the maximum 15 at this point in time. Okay, when I can have more people can do more, then I'll share with you. Okay, right? But right now it's just 15, so really first come first serve. For those of you who want to, please go and apply already. Okay. The last question is, hey Pete, if I haven't sold my property, I haven't done any planning at all, should I apply for the consultation? And I would say you can do that because the consultation also includes not just buying, but the selling process. How do you have these two be in sync, right? Which is the next question. A lot of people always ask, hey Pete, must I rent before I buy my new property? And I will say most of the time, no need to. My team of agents are very experienced in this. They can probably help you to mitigate the need to rent a place. That means you just need to move from your current place, you sell it, and then move to your new purchase place. That's all. Okay, unless it's a new launch, then you have to wait. But other than that, resale usually not an issue. Okay, so this is the FAQ. Let me just put out the slide again, which is here. Okay, so for those of you who want to, you can apply for the one-on-one property coaching over here. Right, I'm just going to put the link here. IWP property coaching. Okay, come, let's go to Q&A if you have any. All right. Okay. Jay is asking 3-bed dual key, a good deal in Punggol, 1,700 per square foot. Okay. I can roughly guess which development you are asking because I look at condos so often. But the thing is this: dual key, okay, this is my opinion, dual key, generally not a good idea. Generally. It's not that you cannot make money. You can. Okay. But generally, I would not want to buy a 3-bed dual key. Why? Because when you buy a 3-bed dual key, you are effectively selling to a much smaller group of people. It's either people who want to buy, then rent out the 1-bedder, or they have an elderly parent, they stay in the 2-bed, they let the parents stay in 1 bed, right? You will not be able to sell it to family who just want the full 3-bed, which is actually a very wealthy group of buyers, right? So 3-bedders is a very, very wealthy group of buyers because the price of 3-bedder these days is in the range of like 2 million plus. So I wouldn't want to exclude that group of buyers. Okay. So for Jay's question, the price is not bad, but it depends on what you want. If you want max profit, I wouldn't go for 3-bed dual key. If you still like dual key for some reason, maybe you are also, staying in one, renting out the other one, or staying in one, let someone else stay there. I would personally go for 4-bed dual key. Or basically go for bigger one, okay, if you can, right? So that's my take on it. Yeah, okay. If you want to go for 4-bed dual key, it will be a bit better. But to be very honest, it's still not as good as just buying a simple floor plate 3-bed or 4-bed. That's the thing. Okay? All right. Single floor plate, standard one usually is the best. You think about your buyer. You don't want surprises, right? So you just want the group that will the biggest group to buy, basically. Oh, okay. Zach is asking why Normanton Park one bedder not making money. Okay, so generally one bedder, I would say you can usually break even, or maybe make a bit, including the rental, right? If you want to make your wealth, one bedder can be your first stepping stone to get into the portfolio to get started, but it will not make you like 800K, 400K, that kind of thing, right? So when you buy one bedder, I always tell the clients is that don't look at the absolute profit. Just look at when you buy it, you also get rental, right? That will help to build your portfolio, to build your first pot of cash. Then you move on to the next one, maybe 2-bedder, 3-bedder. Okay? All right. CT, how about leasehold private property around 10 years? Should let go or go for newer property? Okay. Very good question. But it depends on a lot of things, right? For example, which project, what is the history of the project, how well has it been doing, what's the neighbor doing also, because sometimes maybe the project itself don't have a lot of units, right? Then you look at neighbors. But if you ask me, if you just purely look at age, right? Okay, it's very hard to judge. That's why I like to do one-on-one, because it is never about oh, I got a 10-year property, should I buy or sell? Not like that one. Right? Imagine you go and see doctor. You tell the doctor, hey, doctor, I got flu. Okay, they give you flu medicine. But a good doctor will ask you more history. Right? For example, hey, you sell, you want to buy what? Right? What are you doing with the funds? You got ability to take the loan, right? And why you want to sell now? Is the property not good or what? Or maybe actually look at the property, hey, it's making good money, then don't sell. Right? I can tell you why I am attracted to Ethan's way of working is also because I'm the type that when I look at the portfolio and I come to the conclusion, hey, actually you are quite okay already. You just don't need to do anything, just leave it. I will say that. Okay. Although my agent team, they don't like me to say that because they'll be like, hey, you say don't do anything, then don't make business there. But I always believe in building karma, right? Right now, we tell them don't do anything. Eventually, they will do something, right? Then they'll come back to us, right? Okay. Okay. Let's see. J XEC good investment vehicle. I would say there's nothing different between XEC and non-EC once they go into the fully privatized state already. So not much difference, to be honest. The only difference, maybe I just give a very quick tip here, is that a lot of the XECs, the facilities, the maintenance is something that you need to watch out for. I have seen XECs whereby the maintenance is really quite bad, or in the dialect, really quite cui, right? So you must think about it. When people buy condo, right, they don't just buy private for private sake. They buy condo also for that facility, that convenience, right? So therefore, you need to look at the aspect as well, right? Which is why I don't work alone, right? I work with a team of agents, banker, mortgage broker to get all this information. I always ask the agent, walk the ground, take photo, show me, let's have a look, see what's going on. Okay? All right. So this is the amount of effort that we put in. Okay, wow, 10:46 already. I don't want to hold you all back for too long. I haven't done the property sharing for in a while, so I got very excited. I think I a bit overrun already. But for those of you who want to, this is the property coaching for 101. First come, first serve for first 15. Okay, I'm just going to put a link here. And for those of you who already, hey, Pete, my property is already done, right? I just need to look at my loan, which is also very important. Then you want to go to Ethan. Okay, so if you need to do any of your mortgage refinancing and whatnot, okay, you can go to Unbeatables. Just fill in the link, right? Then make sure that make sure that you fill in the data correctly lah. Then Ethan will be able to get back to you guys. Okay. All right. Oh, sorry, I realized the link is not full. Let me put up here. Okay. All right. Great. Okay, if not, that's all I have. Thank you, everybody. Right. I wish you all a very good week ahead. Let's hope Donald Trump don't do anything silly. All right. And regardless, right, if you are a strong investor, right, for me, it's always a balance. You can have your stock portfolio, but to me, it's a very good balance to have your property as well. Okay. If not, that's all I have to share. Right. For those of you who are applying to the one-on-one property coaching, I will see you during the one-on-one session. Okay. If not, thank you very much, everyone. Once again, thank you, Ethan, for joining us. And everybody, I'll see you all next time. Bye-bye.